Hello everybody and welcome back to another Forex related trading video. Today we are talking about the London Breakout. Now this is a trading strategy or style that is very popular, especially for people who like to trade, well, the London session. If you don't know what that is, then stay tuned. We're going to be talking all about this today for you guys. So let's go ahead and just dive right into the video. Okay, so when talking about the London trading breakout or the London breakout, the idea is that it is a strategy that capitalizes on one of the major peak trading sessions. Now, if you don't know what a trading session is, let's talk about that. There are three major sessions. There's the simplified version. There's like a whole bunch of different stock markets and major markets around the world. You've got the Tokyo, markets. You've got London. You've got the New York Stock Exchange. You've got all sorts of different markets around the world. So Forex is 24/7 really, but it trades for the most part 24 hours, 5 or 6 days a week, depending on where you are in the world. So the London session is actually the most heavily traded part of the Forex world clock. So London is like it's like the capital for Forex trading, right? That's where most of the money moves in and out. And so during that time when Londoners are, and I guess really European people as well, headed to their trading desk, you've got a serious influx in trading volume. And so you've got some big moves that occur in this session. So what is it and why should we trade it? Well, again, like I said, it has the most trading volume throughout that 24-hour trading cycle. And during this select time frame, during these few hours, there are some of the biggest moves throughout the entire day in the Forex market. And so if you're able to catch some of these moves, being on the right side of the trade, which is, the obvious important part, but if you are on the right side of these big moves, it can actually create some fantastic trading setups. And more specifically, what I really like is some great risk to rewards. You can risk small and sometimes catch some very nice moves during the London trading session. Okay, so when is it? That's a pretty important question, especially for people like me who, little spoiler, I can't really trade it very easily. We're going to talk about that in a second, but look at this on the chart. So wherever you are in the world right now watching this video, take a look at where you are closest to or which time frame is most relevant to you, or you can convert it to your own. But the GMT time there and the Eastern time are two little columns that are kind of important. So let's talk about this. So if you are like me in the United States of America, I'm on the East Coast in Atlanta, and you can actually see that when I'm looking at this, the London session is actually kind of at a bad time. It's very early in the morning for me. So you can see if we actually go to the London session, this fourth row down, the London session actually starts at 3 a.m. US Eastern. So not exactly the best time frame for me to be trading. I'm usually sleeping during that time, so I'm not really, active at that time of day. But for those of you guys who are around the world, this is a video for you. This is people, maybe you're in Asia, maybe you're in London or Germany, wherever you are, you can actually see where this time zone lines up. So the important one to note though is that for the London trading session or the European session, it's really when Germany through Great Britain during that whole space, those two ranges of countries, gets to the charts, which is around 2 or 3 a.m. US Eastern. But for their time, or in GMT time, you've got 7 a.m. in Germany and 8 a.m. respectively in London. So this is when the market starts to really pick up. And go to your charts anytime you want, and you will see that those things start to pick up. Hey, also, we've got a tool for you completely for free. Check out the link down below in the description. This is a Forex market hours tool. It basically lets you see whatever time it is or what active markets are going right now. I just wanted to plug that in there so you guys can check out the website anytime you want and use this for free. Again, there will be a link for this down below in the description. Okay, so which markets move the best? So we've talked about the London session. Before we talk about entries and exits, we need to talk about the actual markets that move the most during the actual London session. Well, some of the biggest ones are going to be the GBP pairs. So it would make sense that the Great British Pound is going to move quite a bit during the London session because you've got a lot of business going on in the UK and people are transacting their money and using the foreign exchange market for what it was intended to do, move money around globally. So when we are looking at the London session, the two major pairs that I like to look at, or at least consider, are likely to move quite a bit, are the GBP and the euro pairs. So you can cross these things with all sorts of different things. Like you can look at the pound dollar, the pound yen, the euro dollar, the euro yen, and the euro pound, and all the other ones, right? Euro New Zealand, pound Aussie. All of those are likely to move quite substantially during this time should there be any sort of big move. One other thing I should say is that it would make sense that usually news reports in the morning time for the any respective market, right? So here in the US, news comes out at, anywhere from 7 a.m. to 9 a.m., 10 a.m., right? So a lot of times that is when the market moves respectively. So in the UK, maybe news comes out at 7 a.m., 8 a.m., and it causes the market to move pretty big, okay? So that would make sense as well. All right, so how do we actually take advantage of this volatility? The name of the game is breakouts during this time. Leading up to the London session, the market is actually relatively quiet. And we're going to talk about that in a second when we talk about the Asian session respective to the London session. So stay tuned there. But what we are going to do is we're going to look at a way to identify where breakouts could potentially occur and how we may be able to adapt and capture some of the break. Again, once this thing starts rolling, once it starts really moving, it has the potential to do some big pushes either up or down, but I'm going to talk about some styles of watching for breaks. So let's look at it. All right, so the first thing that I like to do, again, I don't really trade the London session, but I've done a lot of testing. I've done a lot of looking at it. I'm more of a swing trader, so I'm not looking to scalp this thing intraday or anything like that. But this video, like I said, is for the people who are way more interested in, actually taking advantage of these intraday moves that do occur time and time again during this time. But again, if you're in the Eastern, US, it's a little bit of a tough time to get up at 3 a.m., especially, I'm a normal person. I have a normal daily routine. So 3 a.m. is a tough time to be up. But anyways, the first step I like to take is to identify the highs and lows of the previous Asian session. And again, the Asian session comes before the London session. So this actually, during the Asian session, that one is notoriously a bit less of a mover. The Asian session tends to be a less mover, not always, but in many cases. So here's how I like to identify the levels. So I actually use an indicator for this. You can go on, if you use TradingView, which is is my favorite trading platform. If you go over to the indicators section, you can actually search for sessions on chart, which is giving you this indicator that you see here. Check this out. So in the yellow there, by default, that is the Asian session. The London session is in green and the New York session is in pink. Now, one thing I should say, check this out. This is where there's an overlap between the major sessions. And these, hint, are the biggest movements in the market usually. During these crossovers, especially the crossover between the New York and the London session, that is going to be usually your biggest market moving time, because you've got two major situations where you've got the New Yorkers trading, or I guess the people in the US trading, and you've got people in London and / Europe trading. So that causes a lot of money movement going on. So just pay attention to that. Also, so going back to our highs and lows concept, I like to do this. If I'm looking at this, if I'm identifying, possible breakouts for intraday, if I'm looking at this, I would be saying, okay, mark the highs, mark the lows during the Asian session leading up to the London session. That's going to be our first step. You can see there's highs printed there and lows printed there on each one of these sessions in yellow to identify where the range of the Asian session basically left things off before the London session got going. So then, but look what happens once that starts to move. Look at some of these crazy breakout moves that occur right as things get going. Now notice I'm also looking at a 15-minute chart there in the top left. This is really a pretty intraday style of trading because these moves can be quick, fast, and aggressive during the lower time frames, which again, if you catch the right side of the move, can be fantastic. So you got to be, looking for the moves, looking for the breaks, and trying to find places where things are likely to continue higher or lower strongly with momentum. Okay, so here's the entry style. So if I'm looking at this, I'm going to treat it just like how I personally like to trade anyways. Like I said earlier, I'm more of a swing trader. My favorite style of any trading is looking for momentum and trying to buy pullbacks. So if I'm looking at the London session, if I'm sitting there, if you're ever seeing me up at 3 a.m. and I'm looking at this thing, then I'm saying, okay, mark the range. And if things start to break great. That gives us some sort of move, and I like to try and decide to join that move once the momentum picks up and direction is sort of decided by the market. So I'm looking for the break and I'm looking for the retest to try and get long or short. Just flip it around if it was on the short side. And that's how I'm looking to try and get involved. So what about stop loss placement? Because this is a big piece to any strategy. And again, remember that what I'm giving you here is not the full picture of any strategy. You've got to do all your other things. You've got to make sure that your risk management is proper. You got to make sure that if you like fundamental analysis, that you combine that if that's something that you look for. Maybe you're long biased on the pound like myself right now, and you're only willing to take buy trades. You know, all those other things that come into strategy development are very, very important, but this part is definitely key as well. So let's talk about stop loss placement. So another key component to a successful trade is a good stop loss placement. As we just mentioned, it is one piece of the puzzle to make sure that you get right. Very, very important part. I actually personally like to use the average true range for better stop loss placements. I've done a video on that recently. We will go ahead and put that down below in the description for you so that you can grab that video and watch it. I definitely encourage you to check that out. Maybe open that in another tab or bookmark it for later so that you can watch that video on stop loss placement using the average true range. Generally, I'm looking to use structure as well as the ATR to help me with placing a strong stop loss. Okay, so let's look at an example. Here is a example of where you can see, this is actually a 5-minute chart, by the way, as well. Should include that. But you can see that we had the highs printed in the Asian session there on the far left, and then we get the break. The break occurs during the London session, and finally, the retest occurs during the crossover between the London and New York session there in the middle in that darker tinted pink. Okay. The stop loss that I like here, obviously this is hindsight. Like I know I get the comment every once in a while. It's easy to mark this up in hindsight, but I'm doing this for the sake of example. So yes, I know it is hindsight, and this is not a real trade that I took. This is just an example. The idea here though is pretty straightforward, and it would be how I would approach a trade like this generally. So I'm looking for a stop loss that is underneath the structure of the market. So you can see that on the left, you've got strong levels of resistance where price was struggling to break out. Finally, you get that juice with the London session, price breaks up higher, and I'm pretty much willing to take a stop loss that, you know, only if price starts to break back underneath. Now that distance, again, is subject to your personal style of using stop losses, but for me, I like to use the average true range of the time frame that I'm looking for, as well as a combination with structure like we can see here. So I'm using a stop underneath where price broke out of to essentially keep me, keep my risk as minimal as possible on this trade. There it is. That's the stop loss placement. But what about the target? Let's discuss that side of the trade because that is also important and honestly a bit trickier in my opinion here. So where do we put the take profit? This is where things get tricky because there's people who like different styles of trading or styles of taking profit. The cool thing about trading is that there's not one single approach to success in trading, just like there's not a single approach to success in life. There's different ways to take profit. There's different ways to make money in the markets. This strategy, by the way, is one that I don't use, but I know people who are over in Europe who love using this style of trading. So again, there's some options here. For me, I like to trail stop losses personally. When I take a trade, I can actually link this one down below in the description as well. I like to look for opportunities to trail stops to capture crazy big winners every once in a while, even though it sort of makes my win rate a little bit less. That's just my style, but some people don't like that. Some people like to take profits when they come and then move on to the next trade, and I respect that opinion as well. So there are different styles. If you are interested in learning about trailing stops, how I personally like to trade, maybe we'll link that one down below in the description as well. Some traders also like to use a fixed reward to risk. That's another style. For example, maybe you do a 2-to-1 or a 3-to-1, and they go from there, right? So you maybe you say, okay, I want to risk 10 pips to make 30. Maybe 5 pips to make 10 pips, maybe 10 pips to make 20 pips. It just depends what you really are looking for. And again, maybe it's just relative to your stop loss. If you like a 2-to-1 and you risk 10 pips, maybe you're going for 20 pips, right? And again, all this is going to come down to your risk management plan, which is very, very important to check out. that concept and make sure that you're very tight on your risk management. So again, just going to come down to testing that and looking at the particular volatility in the market you're trading. If you're trading something like pound yen, it's going to be a bit more volatile than something like euro USD. So keep that all in mind. All right. So remember, if you use a bigger target, your win rate, like I mentioned, will be lower. So if you're trying to go for big monster trades like I do, it's tough to keep a very high win rate because naturally there's times when the markets just reverse, tag you out, and it happens, and it's frustrating. If you use a smaller target, however, you will be likely to win more frequently, which is great, but your wins will probably be smaller. Okay. So it's, again, there's no magical strategy in Forex. If you made it far in this video, then you're clearly very interested and serious. So I'm not trying to shy that away from you. It is definitely, there's no easy way to make huge money. And this is not a magical strategy by any means. This is just a style of trading that a lot of people love. And I wanted to cover it here on my channel. So this is something that you need to test and decide for yourself which you prefer. Are you the type of trader that likes to go for 2-to-1, 3-to-1, trail stops? What about a timed stop? That's one that I didn't put on the slideshow, but some people like to just say, I'm holding this until the end of the London session and then I'm closing for whatever it's at. So they take a stop loss or they let it run massively sometimes till the end of the session. Up to you what you decide. For me, I like trailing stops. For you, again, going to be up to how you like to trade or the strategy that you find works best for you. So let's talk about the more aggressive style. Previously, we discussed my style of trading, basically the concept of breaking a key level and retesting. But there are some more aggressive styles. Instead of waiting for a pullback, some traders actually like to trade the break itself. So here's an aggressive entry style. This is, again, like I said, different strategies for different people. And it's not one that's just absolutely better than the other. On YouTube, you're going to get people who tell you, oh, you can only make money doing this, or you got to buy my magical course that's going to make you rich. None of that, right? There's different styles that work. I've seen people do many different things. I know people who reversal trade and they do well, people who trade with the trend who do well. So again, it's more about your risk management, your discipline, and sticking to a strategy even when it's not doing great, right? And understanding, how to adapt and how to work your way out of drawdown. All that stuff is way more important than getting the perfect entry all the time. Anyways, aggressive entry on the break of an Asian session high. Here's an example. So in yellow, I've marked the highs and lows of the Asian session respectively. And you can see that this idea is as soon as it starts to break, maybe by 2 or 3 pips, a break above or below, bam, the style of entry here is in, right? So the aggressive style, bang, it shoots up to the upside and you're into the trade looking for the runner and you've got a stop placed underneath structure. So in this case, when you have a tight range like this, the idea here, and believe it or not, that is actually like a range of only like 5 to 7 or 8 pips, that range in the Asian session there. But the idea here is that a key break above, bam, you're right in there and you're just looking for the Asian session to throw this thing one way or the other and try and ride that momentum. So again, using all those same concepts of stop losses and take profits, those are going to be up to you. But the idea here is that our stop is 10 pips below, which is actually just below structure as well. Lines up nicely. And at this time, it was also pretty good for the ATR on the higher time frames. So not so bad. And then bam, I just used a 2.5 to 1 reward to risk. So you can kind of see what that looks like. Again, with targets, up to you, your style. If you like a 2.5 to 1, then great. Try that one out. Test it. See what it looks like for you. This is also the euro pound, which is a different currency pair. This is also one that's interesting to trade during this session because you've got 2 of the major European economies, right? The UK and the euro. Okay, so let's talk quickly about the pros and cons. Very, very brief concepts. The pros are that there are some great big moves. Obviously, you can catch some fantastic moves during this trading session. There's tight spreads, and it's great for intraday traders. So people who love big moves, this is honestly, this is a day trader's best time to trade, in my opinion, for the Forex market, because you've got the most volume coming in and coming out. If you're in the US and you're wild enough to get up in the middle of the night to trade this, I know people who do that, then you know what? do you. If that's where you find your edge, then by all means, do your thing. I'm more of a swing trader, so I'm not, I'm not getting up. But again, for the same reason, that's why one of the cons is that it's tough for some of the North American traders and people who are asleep during this time. And the other con is that not every single day creates a big, huge move in the London session. One thing to note here is that you can usually see a bit more movement when there is some sort of news catalyst coming out right as the London session kicks off. So keep an eye on that. Okay, so let's really recap just for a second here. The main idea behind the London breakout is basically just to capture momentum generated by the high trading volume during this time. Although there are many ways to execute it, the major theme is to ride the breakout in some way or another. I invite you to test theories. As always, I say on YouTube, don't trust somebody, test your concepts, test the ideas that you hear on YouTube. With my channel, my whole goal is to give you guys ideas, share my thoughts as a trader, my experience as a trader, and ultimately to give you guys something to go chew on and to go work on in your own trading. Again, everybody has their certain style that they prefer. And so for my friends out there who like trading the London breakout, I hope this video was helpful to you. If you did enjoy, make sure to smash that subscribe button down below. We are just crossing over 215,000 subscribers, which is just fantastic. If you made it to the very end of the video, also comment down below. I appreciate you guys who watch the videos all the way through. It does mean quite a lot just for the, all the work that goes into these videos. Thanks so much. Make sure to leave a like as well. Share it with your friends if they like the London session, and we will see you guys back in the next one.